Good morning, everyone. Uh, U.S. market had seen a very sharp up move, mainly driven by tech stock. Meta's, that is the Facebook parent company, has reported excellent result ahead of expectation and was up by around 8%. And that has created positive sentiment and a lot of stock moved up. There were a lot of short positions which got covered yesterday. But the futures of the US market, is specifically Nasdaq, is down, mainly on account of aftermarket poor guidance by Amazon and Apple. So futures may come under are down right now. And even if we see Asian market, Japan is closed, and apart from that, other Asian market apart from Hong Kong are up by around 0.5 to 1%. We had seen positive sentiment yesterday in our market, so that sentiment can continue in today's trade. Even if we see commodities are mostly flat. Oil is up by around $1, but aluminum is flat, copper is flat, and steel is flat, and iron ore is up by around 1%.
Thank you, sir. Good morning, all of you. In expiry days, Nifty managed to sustain the 200 TMA closing above that important level. That is comes around 17,220, and Nifty close above that important level. Next immediate resistance is 17,330. That is a retracement level. To expect Nifty weekly close above 17,330 level, then we expect further positive momentum in index. Next immediate resistance place around 17,450 and 17,550 for index, and support place around 17,150, 17,080 at downside. To expect positive open in remain a positive during the day. Bank Nifty also trading the important resistance, important average level. To expect positive momentum in also Bank Nifty. Next immediate resistance place around 36,700 and 36,900 in upside, and first support place around 36,200, 36,000 at downside. To expect in Bank Nifty also in positive territory, and about 36,700. Next positive momentum will be the come towards 37,000 and 37,400 in upside. Nifty Finance also looks positive at current level. Next immediate resistance place around 16,630. Above 16,630, next target will be the 16,700 and 750 in upside, and support place around 16,380 at downside. Stock specific, Coal India looks at positive at current level. Above 190, next immediate resistance place around 204, and support place around 185. Second, AU Bank also looks positive at current level. We already given call in AU Bank, AU small bank. Target is 1460, 1450 in upside, and stop loss place around 1368 at downside. HDFC also looks positive at current level, and LNT also looks positive at current level. We expect LNT move towards 1760, 1770 in upside. Support place around 1680 at downside. That's it for technical. Derivative I can carry.
Yeah, thank you, Vikas. Good morning, everyone. So, as per yesterday's data, as I mentioned in yesterday's trading session, that Nifty is likely to witness and go above 17,200 level as per the momentum in the market. Current scenario as per the OI position, we are witnessing that around 17,000, 17,200 strike call at positions got unwinded, while on the vice versa front, 17,200 and 300 strike put right positions are getting added up. So this is a positive sign and positive scenario. While PCROI yesterday came above, got close at 1.21. So once if PCROI is getting stable at this point of time, so till the time PCROI is above 1.08 level, you should maintain your long positions. On the upper front, we are expecting PCROI to be around 1.45 to 1.50 level in coming trading sessions. So current scenario for market as per the OI data and the derivatives data, it looks so positive. As per the stock specific and sector specific, we expect the banking, finance and FMCG sector to look positive for current trading session. And as per stock specific, we expect a Coromandel, Davies Lab, and Sun Pharma. Witnessed a long OI positions getting added up in these three counters. So keep watch on these three counters. Thank you.
Good morning. Most of the results that came out yesterday were sort of in line in the banking space, except for Axis Bank, where the result was marginally above expectations. This was mainly because of lower provisions, which was at just 0.6% credit cost, which is at a multi-year low. Last quarter, in December quarter, it was 0.8% and year-on-year 2%. Banks saw improvement on all asset quality parameters. Also, ROA and ROE have reached multi-year highs of 1.5% and 16%. This is likely to sustain in future. However, the bank has postponed its OPEX to assets target of 2% for FY23, as they will be focusing more on technology investments. So don't expect a further increase in ROE from current levels of 16%, and they should sustain for next 4 to 6 quarters at this level only. So for this reason, Axis will continue to trade at a discount to ICICI and HDFC Bank, although overall result was decent, and we remain positive. SBI Life result was okay. APE grew by 4% in line with industry, and VNB margins were healthy at 27.4% against year-on-year 19% and quarter-on-quarter 29%, 29.5%. We have seen this phenomena that all life insurance companies have witnessed good margins because of higher growth in the non-par and protection business. The market share dipped slightly to 23.4% versus December quarter 24.8%. We remain positive from long-term perspective. IIFL Finance result was okay. AUM grew by 9% sequentially and 15% year-on-year. Restructured book declined nicely to 1.1% versus 2.8% in December. However, gross NPA came slightly higher at 3.2% against 2.8 in December. And similarly, net NPA also increased from 1.5 to 1.8. This was because of deterioration in the MFI book. So because of this reason, we are neutral on this stock. PNB Housing Finance result was in line with expectation. Loan book remained flat due to degrowth in the corporate book, which now forms 9% of total loans. Gross NPA was flat at 7.6%. If we break up the 7.6%, the corporate GNPA was 36%, which increased from December quarter. It was at around 25%. So still pain there. However, retail GNPA declined from 5% to 3.6%. So we are neutral on PNB Housing. Shriram Transport Finance result was in line. Gross NPA declined from 8.4 to 7.1. This was expected in a seasonally strong quarter for CVs. Restructured book remains flat at 0.7%, which is the smallest compared to all other vehicle financing peers. So we remain positive on the stock. Also, the upcycle in the CV space will be beneficial for Shriram Transport. Sterlite Technology result continued to remain weak. Revenue increased by 7% year-on-year, and EBITDA margin came at just 6% versus normal levels of 17 to 18%. It was impacted by raw material inflation and logistics cost increase due to global supply chain disruption. Company will take price hikes and expects optical fiber cable prices to increase by 10% in this year. But one needs to wait and watch if they can actually go back to their earlier margins post this. And also company has guided that they will be growing FY23 revenues by 25% and margins to normalize in the second half. So one needs to wait and watch whether they are able to do this for at least one quarter and show decent growth in top line and margins. So from a near-term perspective, we are neutral. Varun Beverages result was ahead of expectation. This was led by higher revenue growth of 28%, where volume grew by 18% and realization by 10%. Gross margins declined due to higher plastic prices, but that was more than offset by operating leverage, and hence EBITDA margins came at 18.5% versus last year 17%. After two back-to-back summer seasons getting impacted due to COVID, this current summer season is expected to be very strong. That is the June quarter, which is the best quarter for the company. So expect momentum in the stock to continue. Company has also recommended bonus for one bonus share for 2 shares held. We are positive on the company. Thank you.
Yeah, I'll continue first. Then Laura's Lab came up with the numbers, and numbers were above expectation, mainly driven by higher growth in the revenue. We had seen 2-3 quarters of declining businesses because of one specific region of business which got impacted. But now things are stabilizing and are showing improvement. Revenue increased by almost 38% quarter on quarter and came to par with last year numbers. EBITDA margins also saw improvement, but was a bit below expectation of 30%. It came at 28%. But anyhow, increase in revenue was much higher than the expectations, and that has led to higher EBITDA as compared to expectations. So results were ahead of expectations. We'll see how the company gives future outlook for that, but overall outlook is positive for the company. Finotech Chemical came up with the numbers. Numbers were okay. Here again, the revenue has grown substantially by around 61% year on year and 16% quarter on quarter. But the margin came off quarter on quarter. Last quarter, company has reported a EBITDA margin of around 24%, which came off to 18%. That has led to flat EBITDA quarter on quarter, or marginal down quarter on quarter as compared to previous quarter. Year on year, EBITDA also had shown good improvement of around 18%. Generally, Finotech Chemical takes some time to pass on the increase in the cost to the customer. It doesn't generally take 1 quarter, and that's why we feel that the margin has come out. Now we may see margin coming back to normal in the coming quarter. The high increase in revenue is positive, but overall result is okay. Shopper Stop came up with the numbers. Numbers were in line with expectations. They got result got impacted because of Omicron in the January month, which is generally a very good month for the sales. But because of the Omicron, it got impacted. But if you see the sales growth has come back very well in the second half of the quarter, and if you see the March month, the sales growth was almost 40% year on year. So the revenue grew by around 6% year on year, and EBITDA margin also had seen some improvement to 16.4% versus expectation of 14.5%, and year on year 14.2%. So overall result is okay, or in line with expectations. The outlook, since the stock has moved up very sharply before the result, so we may see some profit booking on this result account. Huhtamaki India Limited, that is packaging company, has come up with the numbers, and after many quarter of poor performance, company had shown improvement in this quarter, mainly driven by cost control. Their sales, their employee cost and other expenses has come off, whereas gross margin declined year on year, so flat quarter on quarter. So the benefit of the lower cost got reflected into EBITDA, and EBITDA margin improved to 7% versus quarter on quarter 1.6%, and year on year 0.7%. Company so outlook for the Huhtamaki looks positive from the current level. Then Biochem come up with the results, and results were marginally above expectations. Revenue increased by 31% year on year and 10% quarter on quarter, and marginally above expectations. Whereas EBITDA margin came in at 24%, expectation of 25%. Last quarter it was 22%. In year on year it was 24%. So overall result was marginally above expectation. So now anyone can take up the other results.
Yeah, good morning, everyone. India Mart has posted its result. The company has posted below expectation numbers both on the revenue and the margin front. However, the company has approved buyback of rupees 100 crore at a price of rupees 6250, and the current market price for the company stands at 4891. This is positive to the company. Stock is trading at a PE of 43.4 times FY23 EPS. Emphasis has posted broadly in line with expectation set of numbers both on the revenue and the margin front. Dollar revenue came in at 431 million versus expectation of 434 million. For FY23, management has given guidance that the company is looking to grow at industry leading growth in the direct business, and operating margin is expected to be in the range of around 15.2 to 17.5%. Current EBITDA margin for the company for the quarter stands at 17.6%. Outlook is neutral. Stock is trading at 29.4 times FY23. Yes, thank you.
Good morning. Vedanta reported its numbers and the result was above expectation. Revenue came in at 39,822 crores versus expectation of 37,162 crores. EBITDA came in at 13,633 crores versus expectation of 13,108 crores. Company has also announced first interim dividend of rupees 31.5 per share for FY23. Record date is 9th of May. Ambuja Cement's result was above expectation. Sales volume came in at 7.5 million ton versus expectation of 7.46 million ton. Realization per ton came in at 5241 versus expectation of 5334. EBITDA per ton came in at 1,055 versus expectation of 916. Last week we saw ACC reported numbers wherein its EBITDA per ton came in at 823 versus 741 quarter on quarter. Ambuja's EBITDA was higher due to lower operating costs, mainly driven by the agreement which the company has with ACC. So this has resulted in this has helped the company to improve its EBITDA. That's all from me. Thank you.
Hero Motocorp is likely to report numbers. We had already seen that the volume is down by around 24% year on year and 8% quarter on quarter, but that is already known. The key thing to watch is the margin, and margins are likely to remain flattish quarter on quarter, but will be down year on year. So result will be more of an okay set of numbers. JSW Energy is likely to report okay set of numbers. The revenue is likely to increase by 22% year on year, but 1% quarter on quarter. And also margins are likely to remain flattish both quarter on quarter and year on year. So result is likely to be okay. Similarly, KEC International is also likely to report flat set of numbers. Year on year revenue is likely to grow by around 5%, but EBITDA is likely to come off by around 5% year on year. Prakash Industries is likely to report number. Here the numbers are likely to be showing some improving trend on account of higher realization in billet and billet prices and sponge iron prices in this quarter. Then Symphony is likely to report number. Here because of the higher inventory, they are not able to push in more sales in this quarter. But anyhow, sales are likely to be remain flattish year on year, and EBITDA is likely to come up marginally for year on year to 21% from 24%. So result is likely to be more of a okay set of number. Then Tata Steel is likely to report number. Here quarter on quarter, the margins are likely to come off a bit, and last quarter the EBITDA margin was around 26%. This is likely to come out to around 24% in this quarter. So more of a okay set of number in line with what is the trend in the market. Then Titan is likely to report number. Titan has already disclosed the growth in their businesses of jewelry and watches and everything. So according to that, the revenue growth year on year is around 1%, decline of around 1%. but margins year on year are likely to show improvement. Last year the margins were 11%, and this year it is expected at around 14%. So more of a okay set of number from Titan. So that's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.